Chairman of ANAROCK Group joins us now. Anuj, good morning. Thank you for joining us. Now, Anuj, can you elaborate on why Bangalore and Hyderabad have seen such strong growth, particularly in micro markets there?
So a couple of reasons for that is one is that the tech real estate demand still continues to remain very strong. And, this is coming in on the back of the GCC demand. So a lot of the global capability centers coming in from the US. I mean, these are companies which are like tier 2 companies in the US. And for the first time, I'm really hearing the names of these companies. Usually it used to be tier 1 companies. I think India's talent is really attracting a lot of these companies to come in and set up the GCC centers there. And that's what's creating the demand and the employment. Second is the Indian startup ecosystem, that continues to grow and the demand there is continuing. And the third is overall economy and the infra push that is happening that is creating the demand for new homes, bigger, better, and more facilities. That's where, all the things sort of like the sun, moon, star, earth, everything is aligned at this moment in time, both for the office sector and the resi sector.
Isn't it? I mean, we were just looking at some of those micro markets. I mean, Bangalore Whitefields has seen what, an 80% rise in prices, and Dwarka Expressway in NCR also almost the same quantum. I mean, I know real estate is very niche, even building to building when it comes to places like Mumbai and region and area specific. But how do you see these characteristics when you're seeing such an exorbitant kind of jump up in rentals?
So I think two things. One, you should look at it in the time frame. So it is over a period of 5 years that this increase has happened. I must also say to the viewers that between 2013 and 2019, on an average, the price rise was about 2% per annum. Income levels during that period were rising at 7-8%. So a fair amount of the catch-up is still happening from 2020 to 2024 because the prior period, 2013 to 19, was only a 2% per annum price increase. Second is many of these micro markets which were on the outskirts of the city have got great infrastructure, great connectivity, and we are seeing many of the tech companies wanting to move their base to these, maybe a little bit of the outskirts of the city because the talent is more happy to live on the outskirts and maybe do a hybrid, come into the office 2 or 3 days, and the rest of it, they have bigger homes, better quality homes, and more affordable homes on the outskirts. And that's where you're starting to see many of these, micro markets like Dombivli or Panvel or Bagaluru in Bangalore, really catching up on the price appreciation.
Okay. What about affordability factor here, Anuj? I mean, there has to be a level beyond which it just does not make any commercial sense or does not make any sense for anybody to buy. Are we reaching that?
Not as yet, Nikunj. We did put together affordability factor, income versus the mortgage that you pay. We're still much lower than where we were in 2014. So 2014, 15, 16 was higher than what we have arrived for 22, 23, and the first half of 2024. Again, if you look at it, Nikunj, these price increases that we are saying is, 50, 60% is over 4 years. So actually it's about, 12, 13, 14% price increase. And considering the fact that the prior period had only 2% price rise. So, from that perspective, the affordability still continues to remain strong. I do also feel is that the developers this time during the cycle have been very careful on not increasing the prices exorbitantly. They just want to continue with the sales momentum, bring down their debt, continue to get in the cash, and not necessarily break the cycle by increasing the prices, rapidly.
Okay. Where does the whole angle of this entire 7-year theory of real estate kick in? I mean, if this is a 7-year cycle, then we 4.5 to 5 years already into the cycle.
I think, Nikunj, we would I would say is beginning of really 2021. The cycle would have started. So you can say end 2020, beginning 2021, the cycle started. So we are about 3.5 years in this 6-7 year cycle. So I would say it will be somewhere between 55-60%, of the cycle where we are currently on the residential side.
Okay. Where does this comparison of tier 2 versus tier 1 kick in now? Because that's where I also understand, forget 80% appreciation, the prices have appreciated by more than 100% in last 1 year in some of the tier 2 cities.
I agree with you. Particularly cities like Ahmedabad, Lucknow, Bhubaneswar, Cochin. Some of these cities have really done very well. Goa. I mean, that price increase has been very rapid in these. But also, these were cities which were very lackluster, were very sleepy. They were really not on the map of India prior to 2019 as far as real estate is concerned. And these are the cities where now that the talent is starting to work from these cities and they're enjoying going back to their hometowns and continuing to work from there, that's where the demand for retail, for offices, for residential in these cities has grown. And that's where we are seeing a much more rapid price rise than even in the tier 1 cities. But overall, if you were to look at it, the volumes in these cities compared to the, other tier 1 cities are still much, much lesser.
Okay, fair enough. And, I just wanted to get in an overall view, Anuj, from you as to what the outlook is in terms of the price appreciation continuing in the near future. Is there going to be a slowdown? And what do you believe are going to be the market factors that will really influence this trajectory?
So my guess is, price will be anywhere between 7 to 9% per annum increase in the price. Again, I say is, this time cycle is a little bit different from the developer's perspective. They're not really wanting to push hugely on the price. So I do feel it will be about 7 to 9%. I think what can create some trouble is that in some of the micro markets, if the supply starts to exceed the demand, today it is very well balanced between supply and demand. Many of these markets, perhaps demand is more than the supply. But if in some of these micro markets, the supply starts to increase rapidly, that can create some sort of concerns within that sector. And then overall, it is going to be about the economy, about the job creation, or if there is anything at a global level that lurks and causes issues within our economy. As far as the sector itself is concerned, I think the stakeholders this time are more mature. They're focused on delivery. They're focused on completing their projects. They're focused on sort of not increasing their debt. So I do not see much concern coming in from the stakeholders or from the generic real estate. It could be more macro that may impact the real estate, and hence that may cause some concern.
Okay, fair enough. And what about the regulatory changes? How has that really affected the overall demand supply situation? Do you think that to a great extent that has helped stabilize the market? I think that would be the popular opinion. Give us a sense as to down the road, what are some of the major challenges that you believe still need to be addressed?
Clearly from the capital gain tax, there was a bit of an issue that had come in, but the Honorable Prime Minister has now sort of grandfathered that. So, that concern for the immediate moment has gone away. Going forward, that will still continue to remain. But other than that, there wasn't really as many regulatory changes that have been made. I do feel is that the existing regulations that are in place, they are for the time sufficient. Maybe they just need to get more and more tightened in some of the states. Perhaps RERA needs to be a little bit more stringent. Maharashtra does a fantastic job of implementing the RERA. Some of these states should follow the role model of what Maharashtra is being able to do. But overall, regulatory wise, I do not see the government really wanting to get involved. Markets are doing well, consumers are happy, developers are focusing on completion. The scenario that we had earlier before RERA has sort of disappeared. And clearly, it is becoming a more consolidated and a mature sector, which is what the government had wanted. I feel is that they should just continue with this and not try and bring in more regulations than what already exist.
And it's so good having you on the show. Thank you for taking the time out and giving us that perspective on what's really happening with the real estate market.
Thank you.
If you like this video, then like, share and subscribe to ET Now.